All right guys, so in this video, in this lesson, what I'll be talking about to you is support and resistance levels. This is pretty much one of the most important things when it comes to technical analysis, is to find areas on a chart where pretty much price action pauses or stops. You know, that means that there's some kind of support there or some kind of resistance. You know, support is at the bottom, resistance is at the top, and price action is in between there. You know, so that's exactly what I'm going to be talking about when we jump on the charts. And there's many different support and resistance levels that I look at. You know, one of them might be an indicator that you've learned in the previous lesson, such as the 50 EMA, the 50 moving average. You know, another indicator will be, well, not really an indicator, but a drawing tool such as Fibonacci retracement that can act as a support and resistance level. And then obviously we have horizontal lines, and then we have trend lines as well, which are acting as either support or resistance. Now, before I jump into the screens, I just want to cover something in case I forget, and that is support becomes resistance. What was once support becomes resistance, and the other way around, what was once resistance becomes support. You know, so you'll see that when we jump on the charts, but pretty much what that means is that when price action is bouncing off a horizontal level, once it breaks that horizontal level, this support will eventually become resistance, you know, and price action will break it and retest it from the bottom and continue lower. That's what I mean by that. Now, you're gonna know everything when we jump on the chart. So with that said, let's have a look at those charts. All right guys, so again, let's have a look at these charts and let's talk about support and resistance levels. This is extremely important. You might have to watch it a few times. I think you're gonna have to watch all of these videos a few times to fully understand everything that I talk about. But what are support and resistance levels? Okay, so there are many different types of support and resistance that you can look at. Okay, let's have a look at the monthly chart here on pound dollar. Okay, so when we look at the monthly chart on pound dollar, okay, support and resistance. I'm going to remove MACD just for now. One support and resistance level is the EMA. Okay, we talked about that in the previous lesson, the moving average. Okay, that is one support and resistance level. That is a dynamic support and resistance level. So just to refresh from the previous lesson, a dynamic support and resistance level means that it changes all the time. Okay, it moves with price action. Like right here, you can see that it was a perfect representation of this dynamic support level. Okay, price action acted as support. Sorry, the EMA acted as support. In this case right here, the EMA acted as resistance right here. Okay, same thing right here. The EMA acted as resistance. So that is a dynamic support and resistance level. But what other support and resistance levels can we have? You can have things like horizontal support level. This is a drawing tool. It is just a line. Okay, but it's something that we will use all the time. And why do we use it? Well, because it works. You know, when you put in a horizontal level like this, you can know that, hey, pretty much since 1987, British pound did not break this level at 1.42. Okay, so drawing tools, you're going to be looking at actual numbers here. So 1.42, that is the price. Okay, so the British pound did not break 1.42. Okay, so you can see this is a horizontal level. This is a fixed horizontal level, a horizontal line to be exact. And this line does not break. Okay, this is a major level. So when we're talking about horizontal lines, there are majors and minors. So something like this, I pretty much, when you're drawing these levels, you want to be focusing more on the extremes. So on the extreme movements, such as this, the extreme lows, like right here, these are the extreme lows. There's other horizontal levels that you can plot. They're kind of like in the middle of price action, like this one, okay? You can notice that there's some bounces here and there, you know, like it acted as resistance here, it acted as support over here, it acted as support over here, it acted as support over here, you know, but at the same time, it was broken over here, it was broken over there, it had some consolidation right here, it was broken again, broken again, broken again, broken again, broken again. So as you see, it has rejections, but it also has a lot of breaks. That is a minor level, okay? And we can even type that in here. Minor support, or sorry, just minor SR. That's what you will always see me refer to, support and resistance. So minor SR, okay? And it's just there in the middle. Let's actually make this larger. So minor SR, and I'll just move it to the right. You don't have to name this or anything like that. I don't name it myself, just right now, just for teaching purposes. So that is a minor support and resistance level, and this is a major SR, support and resistance level. Let's do the same thing, make it larger, and move it to the right. Okay, so we got minors and we got majors. And that is something important. This is an important point. You have to be able to distinguish between a major support level and a minor support and resistance level, okay? Now, but that's it. A major is just one like this, where things are beautiful, things are the extremes, okay? A minor is a level that has rejections, but it also has a lot of breaks. You know, in other terms, a major level has majority rejections and maybe one or two breaks like this. It only broke right here and it broke right here, you know? So a few breaks, mainly rejections. A minor level is both. A lot of breaks, a lot of rejections, okay? Another major level is up here. Well, kind of like right there. You know, you can notice that this general region could also be classified as a pretty good major resistance level because it has some good hits, you know. It has acted as resistance, acted as support, has a few breaks here, but then a very good resistance and more good resistance in this area. Another thing that you need to know when it comes to these support levels, these lines, is they should not be treated as strictly, you know, support at 1.42, such as this. Don't look at it as just 1.42 as a support level. It could be a zone, it could be an area, such as right here. You can notice that this is more of an area, okay? The general region is acting as support and resistance, okay? So sometimes when you're gonna notice that there's an area there, you know, maybe one level is predominantly better, but maybe just slightly above, there's also some resistance or support. Okay, so this is a zone, and you can draw that in as a zone. So when you go to drawing tools, you can find like a rectangle as an example, you know, and just draw it in. Make that a zone if you want. And you can extend this rectangle as well. You know, extend left, extend right. And there's your zone, okay? So that's it. That's it for the horizontal levels. That's how they're drawn in, okay? So the main thing that you need to know is major support, which is this, you know, extreme lows, that's major support. Minor support is one that has breaks, but also rejections. At the same time, they cannot be exact, you know, don't look at them as an exact level. Always think of it as a little bit of a zone. Like in this case, we have a zone here, okay? Even right here, this is more of an exact level of 1.42, you know, but it's also just a tiny bit of a zone, you know? So always kind of look at it that way. And again, I like to delete my lines. I like to keep it simple because obviously I don't need this line up here because this is a monthly chart and it will take years for price action to get up that high, you know, so I simply just remove it. You know, this can also be used as just a simple line as well instead of a zone. You know, you can notice a little bit higher. It's a little bit more accurate right there. Okay, so that is minor and support and resistance levels and major support and resistance levels when it comes to horizontal lines. Okay, another support and resistance level. So now we looked at two. We looked at the 50 EMA, okay, and we looked at horizontal lines acting as support and resistance. Another thing is trend lines, okay? So trend lines is something that, again, you're going to use quite a bit. And here's a trend line, okay? So trend lines can be drawn in a few different ways. But also, when you're drawing trend lines, make sure you're connecting the extremes, okay? Because I find people, sometimes they go crazy with their trend lines and they're drawing trend lines where they are not supposed to be drawing trend lines. You know, trend lines are kind of, you're connecting the extreme lows. So in this case, you only have 2 rejections. It's not the best one. Something that I didn't cover. When it comes to these resistance levels, make sure that they're actually being respected. You know, so don't just draw in a line with 2 rejections. This is a line just with 2 hits, 1 hit here, 1 hit there. You know, you can draw it in to kind of see if there's going to be a 3rd rejection. But 3 rejections, that's kind of, at that point, you know that that's a good support or resistance level, that is a good trend line. Okay, so when you have multiple rejections like that. Now a good trend line is this is a good trend line. It has 3 good rejections and then a 4th. Okay, so it acted as support. This is the first level, that's where you start drawing it. Acted as support, acted as support, acted as resistance. Okay, so when it broke it, came back for a retest, well, now that's acting as resistance, and now that can be a short. Okay, another thing that you need to take a note of, write this down right now. Okay, what was once resistance becomes support. Okay, so what was once resistance becomes support. Something important, something you should take note of right now. And what I mean by that, you know, it's simply this. This this trend line was once support, and then it became resistance right here. When it broke it and retested, that's a break and retest, and now what was once support in this case became resistance. Okay, same thing for this horizontal level, the horizontal line. It was support once, twice, 3 times, 4 times. It acted as a really good support. Then it broke it, and guess what? It became resistance. It acted as resistance. Another thing to take a note of is it's the same thing for the moving average. You know, what was once support will act as resistance. Okay, so make sure it actually works. So sometimes you're going to look at the moving average and it's not being respected. In this case, it is. You know, the moving average is being respected. But in some cases, it's not going to be respected. So at that point, it's not a valid level. You know, same thing like when it comes to minor support and resistance levels. Like sometimes they're respected, sometimes they're not. So that's why it's a minor level, like what we talked about. It's a minor level. This one right here as an example. Okay, because it has many breaks and a few rejections as well. So it's a minor level. So it's good, but it's not as strong as this. You know, you can still use it in your analysis. I will still use it, you know, but I will not rely on it. I will need more, okay? What else when it comes to horizontal support and resistance levels? So we looked at trend lines, we looked at horizontal levels, we looked at the 50 EMA. They'll be the main horizontal, those will be the main support and resistance levels that we look at. However, there's going to be one more, which is something I'm going to explain later, and that will be the Fibonacci retracement. Okay, the Fibonacci retracement tool, we will cover it in a lot of detail in the coming up lessons, but that is also one tool that I will use all the time with all of my analysis. That is why I want to dedicate an extra lesson to it, but it will also be used for spotting support and resistance levels. Now, one thing I want to say is, how do you draw your trend lines? Okay, let's switch it up. Let's go to the daily chart here, because we were looking at the monthly chart, so let's have a look at the daily. How do we draw support and resistance levels? Okay, how do we draw trend lines? Well, there's a few ways to draw them. You can draw them through the open and close prices. Okay, so when it comes to the candlesticks, you have the wick right here. That's a wick. That is a wick. Okay, and then you have the body, the big body. Okay. So we got wicks and a body. When you're looking at a candlestick, let's just focus on that a little bit. We'll talk about candlesticks in a second as well, in another lesson. But when it comes to candlesticks, you get the body, okay, which will be the thicker area, and then you have the wick, which will be the longer area. Okay, so price action opened right here and closed down here. That's why it's red. You know, so it opened where the thickness starts, and it closed right there. This is the extreme high of that day. It means that price action opened over here, went up, and then went back down to close all the way down here. Okay? So we will explain this in more detail in another lesson when it comes to candlesticks. But one way to draw trend lines is you can draw them through the open and close prices, like I do here. Open and close, open and close, open and close, open and close. Or you can draw them through the extremes, which will be the wicks, okay? So the wicks are the extremes. And you can draw kind of connecting the wicks. And you can notice that in this case, it's not the best trend line. It kind of looks a little bit weird, you know? It's not as good as drawing it through the open and close prices, okay? It doesn't work that well. But in some cases, it will work better, you know? But to me personally, here's one case where it kind of works, you know, drawing it through the extremes. So I will use both. You will see me sometimes use both. But the one thing that's most important is whatever you do, be consistent with it. So if you're going to draw your trend line through the extremes, which means the wicks, you know, the top of the wicks or the bottom of the wicks, if you're drawing it through the extremes, make sure you're connecting the extremes and only connecting the extremes. Sometimes I notice people do this. They start at the extremes and then they will like go into the body. That's not valid. To me, that's not valid. You know, it has to always be extremes, because when it comes to the body, you can draw it in many different ways. When it comes to both, I mean, you can connect it with a wick. You can begin it with a wick and then go through the body and go to the wick. And that gives you so many different variations. Whereas if you only use the extremes, you get one trend line and one trend line only, okay? Whereas if people go and start using the wick and start using the bodies as well, then they get like many different variations of a trend line that they can draw, okay? You want to be accurate when it comes to trend lines. You want to be very accurate when it comes to trend lines. So to be extremely accurate all the time, you will use one of those two methods. You will only draw it through the extremes, which is a great way of drawing it, and it works well in this case right here, okay? You can draw it also through open and close prices, and only through open and close prices. Again, I don't want to be drawing through open and close and wicks at the same time, okay? So I don't want to begin at the open and close and then like connect the wick. No, only open and close prices, okay? That is one pet peeve of mine. I have just one pet peeve that people do, and that is that, you know, because literally, if you're not strict with drawing your trend lines and you're gonna just be random with it, you will have so many different variations that it's crazy. It's not gonna make sense, you know? So to me, only two ways of drawing them, either open and close, like in this case, this long trend line that's open and close, or the wicks, the top or bottom of the wicks, the extremes, the extreme highs or the extreme lows. Like in this case, this is the extreme highs, okay? It's a very important lesson. And pick whichever one you want to use. For myself, mainly I use open and close, but like I said, sometimes drawing it through the wicks, the top of the wicks, meaning the extremes or the extreme lows, the extreme highs or extreme lows, is very helpful as well, like in this case, okay? So that is it. That is it when it comes to support and resistance levels. So we looked at a few things to summarize. We looked at the 50 EMA. The 50 EMA is a dynamic support and resistance level, okay? Dynamic support and resistance level. Make sure it works as well, because on some pairs it will not work, it will not be respected, okay? Therefore, it will be just acting as a minor dynamic support and resistance level. In this case, it is being respected quite a bit. You know, there are a few hits of this 50 EMA on the monthly chart. So it's a major level, it works, okay? But it's dynamic in a way that it changes all the time. Then we have fixed levels, like this horizontal line, okay? So we have the horizontal line. It's something you will always use in your analysis, okay? And in this case, we have major support and resistance level. This is a major support and resistance level. And it's major for the reason being is that it's mainly being respected. Like I said, this level has not been broken since 1990s. You know, it's been being respected since 1990s, okay? So that's a major level. A level like, you know, let's toss in a random level like we did kind of right in the middle, like right here. You can notice that it has some rejections, like it has, you know, a good rejection here, it has another rejection here, but it also has a lot of breaks, you know. So it's a minor level. This is a minor level. It is being respected, but it also has a lot of breaks, you know, so it's not that reliable as a major level. I will still use it in my analysis, but it will need more than that. You know, it will not be my main indicator or main tool that I use to predict where price is going to go. If it's a minor level, I will need more. I will need to stack my confluence. I will need to stack my tools and make sure it's actually a good buy or short. Okay. So we got majors, we got minors. The next support and resistance level that we looked at are trend lines. Okay. And trend lines is also, you can have major trend lines and minor trend lines. But for trend lines, always make sure you're drawing it through the extremes, extreme and price action. Okay. Sometimes I see people draw trend lines that are just totally weird. And they will be like starting at random places and then like ending up in like random places like this. It's a trend line, but it's not really gonna work that well. You know, it is a trend line. But for me, what you will look at is when it comes to trend lines, I wanna be focusing on like what's happening now, what is happening with the current trend, okay? This is what's happening with the current trend. The current trend is down, and I have this trend line, which is acting as support, okay? Price action was acting as support. That's what matters to me. What matters is what's happening now, not what was happening back here and now we're down here, you know. So much has happened since then. Price action went up, price action went down, price action consolidated, you know. This trend line to me is pointless, you know. What matters is what's happening now, okay? Another trend line will be here. As an example on the daily time frame, what we looked at, you know, this one. This is what matters. It's now because we're in this bullish trend, we're trending upwards, so this trend line works. It's not a random trend line, okay? Same thing with this one. It's what's happening now. We're currently in this small pullback, so we draw this trend line. It works, it matters, okay? It is not a random trend line. The next thing with trend lines that we talked about is open and close. Be consistent with the way you draw it. Either it's going to be always through the open and close or through the extremes, one or two, not through the extremes and open and close at the same time, okay? It's either going to be the extremes or it's going to be open and close, one or the other. You can use both. I will use both. You know, sometimes I will draw my trend line like this through the open and close, and then at the same time I will also draw it through the extremes because it works, okay? Sometimes it might work better through the open and close, sometimes it might work better through the extremes, okay? And the next thing that we looked at was the Fibonacci retracement tool. That is also support and resistance, and we will cover it more in the next lesson. But check this out. Sorry, in another lesson coming up. But check this out. Let's talk about stacking confluence factors to finish it off. We have the 50 EMA. This is what's called an amazing setup, okay? So how do these drawing tools, how do these support and resistance levels play out? What do you do with them? So you stack your confluence factors, okay? So we have the 50 EMA acting as resistance. We have this horizontal support and resistance level acting as resistance, okay? Do we have a trend line here? Not really. Can we draw in a trend line? See, it didn't reach the trend line, so the trend line is not valid. You don't need that there. Remove it. Okay, what about the wicks? Can we draw it through the wicks? Will that make sense? Does not make sense. Don't need it there. Remove it. But what do we have? We have the 50 EMA acting as a resistance. We have this horizontal, beautiful horizontal major level acting as resistance. And we also have the Fibonacci tool, which again, we will cover in a coming up lesson, but it is also providing us resistance. This is now a great short. We have a lot of resistance here. Price action is rejecting it, and it's a great short. So that is it for support and resistance levels. You might have to watch this a few times again to fully kind of engrave the knowledge into your mind. But that is it for now, and you will see me draw these levels many more times as we go through the lessons. Okay, this is just the introduction to this. So that is it. I'll see you guys in the next lesson.